All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So we're going to get this party started over here with our morning analysis. So we're going to put everything out on our bias chart. If you guys are new here, we do this every single morning. Same analysis on all the majors, making sure we identify, try to identify all the key levels of support and resistance that we can. All right, so the euro, we've kind of already gone through it this morning. I don't have to really beat it up too much here. But what I do want to point out regarding the euro dollar is the euro is very close to what I would consider is support this morning. Okay, now if you look at this formation, okay, we've got here, this is obviously key resistance. So any move, and I just want to reiterate here, any move up to 113, I am a seller. Now, we would have to have a pretty weak ADP non-farm today in order for that to happen. The market's looking for basically 195,000 jobs, somewhere in that neighborhood. We would have to really post an ADP non-farm of like 120,000 jobs. If we do, the euro is going to come screaming back up towards 113. Now, there's a couple schools of thought when or if that happens. Okay, because if you go, well, Blake, if sorry, I just saw something funny. Jared's funny. If let's say the ADP non-farm is much weaker than expected, like 125,000 jobs. First of all, that would be unexpected. We'd all go, "Oh my God!" But second of all, let's realize that it's just the ADP. It's not the actual jobs report. Okay, it's not the BLS number. The Bureau of Labor and Statistics is not their number. It's a private sector number. The consistency between the ADP and the BLS is not always there. And last but not least, the Fed's looking at a broader brushstroke of data. It's not going to get worked up with the very, the minutia of every little individual data point. Because if you look at here, I'll just pull up the chart here. If you look at ADP and you look at like the chart of its I'm trying to pull it over really quick. You look at ADP non-farm. I mean, we even if we post 125,000 jobs, which would be down here where my mouse is at, consistently we've been having strong employment. You can see very strong employment since the financial crisis, and it's been consistently strong. Yes, you have a couple of dips down here, but overall, again, the broad brushstroke, when I say broad brushstroke, is we have pretty strong employment. Do you get it? That's a broad brushstroke. No matter how, even if you miss it by a little bit or, you beat it by a lot, it's a broad brushstroke. That's what the Fed's looking at. The Fed isn't looking at this. That's not what the Fed is looking at. The Fed is looking at this. Okay, do you guys get that? Do you understand that concept? All right. So with that being said, let me get rid of that. Even if it was a really, really poor number, the euro spikes up like this, I'd be a seller. I would sell it right up here if that happens. Now, I don't think that's going to happen, and I don't have any euro exposure at the moment, aside from euro Swiss. But that's not. I don't have any euro dollar exposure. The only dollar exposure I have right now is the dollar Swiss. That's it. Okay. But if I wanted to short the euro, it'd be at 113. I'd be a seller at 113. So the spike high here is 112.95. So I'm just going to write down 113. It's key resistance. It is the underside of that trend line. If we get there, I'm a seller. Period. Now let's talk the flip side. Let's talk about a strong number. Let's say we have an ADP number that comes in at 240, some ridiculous number, and we go, holy crap, oh my God. Well, guess where the euro's going? we're probably going to see this 111.75 that we talked about yesterday, which, by the way, was support that we were looking at, like going through here. Um, we'll probably see, this support again. I don't know if we're going to get all the way down to 111. I would think that'd be pretty. I would think that'd be pretty exaggerated if we made it all the way down there, but uh, we may get down to like 111.40, and this would probably be a good area to be on the long side. For those of you that are just trying to play the range. Now, I personally would rather be long the dollar than short the dollar. Okay, if you don't know, the reason why is because the Fed's going to be raising rates way before the ECB. If they're going to do it, they're going to be doing it way before the ECB. So I'd rather be on the short side of the euro than the long side. But there are different schools of thought. Just because I feel one way doesn't mean that you should feel the same way. I know a lot of people that are like, Blake, Fed's going to raise rates and the dollar's going to crap the bed. Or Blake, Fed's never going to raise rates, so I'm going to short the dollar any chance I get. Fine. I don't really care what you think. Not that I don't care, but it's not. It's your prerogative to feel however you want to feel. You know, there's 1,000 ways to skin a cat, and I skin a cat this way by shorting the euro. You can skin the cat by buying the euro. I don't care. Just do it at strategically right spots. The great thing about the market is the market goes up and down. It doesn't go straight up and it doesn't go straight down. It goes up and down. There's going to be easier ways to trade the market. Trading in the direction with the trend, or in the there's easier ways to do things. There's easy ways to do things. There's hard way to do things, and it's up for debate. What your way is the easy way, and what way is the hard way. My opinion is we're in a very big flag pattern that's eventually going to break down. It's a big euro dollar weekly flag pattern that's just on the cusp of breaking. We're probably we're probably within a month of breaking lower. Fed raises rates next month in a couple of weeks. Yeah, the euro dollar is probably heading down towards 80 whatever cents. Okay, we're probably heading down here, but we're not there yet, and we're not even close to breaking down, and that's not even a thought right now, because really what has to happen in order for that to even come close to happening is we have to break through 110, which we're not even there right at this moment. Okay, all right. So again, that's just my very long-term view, but that has nothing to do with what we're doing at the moment, other than I'd rather sell rallies than buy dips. Okay. All right. So anyway, a move back down to 111.40 probably give you an opportunity to be on the long side if you want. There's 110.90, which is really critical support, you guys know, and then 111.40. Okay. Bias is range. We are in a range environment. It's not bearish yet, although that is a very bearish pattern. This is a bearish longer term pattern. It's right now we're in a range, and a very frustrating range at that. It's not even a fun range. It's a very this is the type of range that will, if it not played correctly, you will be knocked out of the business, and you will not be a trader much longer if you're not playing it carefully. Okay, that's why it's so imperative. By the way, I don't know if you're watching this. I got to point this out. If you guys want to short the dollar right now or think about it, look at this. I just glanced at it. I can see it from my other screen over here. I look at 6 screens throughout the course of the day. Actually, take that back, 8. 2 of them are mobile screens. They're a laptop that I can take around the house, and one of them is my iPad that I keep running all the time, or most of the time. But I just saw gold, and look at this. Look at gold right now. Look at that hourly chart in gold. Look at that hammer. Hold on. Look at the hammer in gold. Whoa. Whoa. That's not gonna help the dollar right there. Look at that false breakdown. Big hammer. I don't trade gold. Obviously, I just want to bring it to your attention. Hold on a second. Oh, snap. Okay, see that? Yeah, I have to tweet it. Sorry, you're gonna have to wait. Sorry, guys. Gotta do it. Just bear with me. Okay. This is important because, obviously, if you're trading the dollar, you get an inverse relationship between the two. So if gold's spiking up like that, it could create some dollar weakness. Okay. Big hammer, false breakdown, all that stuff. Okay. All right. Anyway. Okay, let's go over to the cable. Um, Sorry about that, guys. Excuse the temporary interruption to your normal broadcast schedule. All right, here's the cable. We got to get through this stuff really quickly too because ADP is happening in like half an hour. Okay, so here's the cable. We had a nice little bounce in the cable. Now, this is really interesting. The pound really looked, and I have to take away today's price action. Let's look at yesterday. The pound looked very heavy here. Okay, support came through support. This red candle, by the way, that's not a true candle because it was. I have to explain to you that it would happen on a Friday late afternoon. MB trading, even an hour after the market closes, it still records data. And so that Friday at the end of the day, the bids basically dropped and it put in a big red candle. It's not actually a real, it's like a bad print, if you will. It's right there. Okay. So, but looking at the cable yesterday, I was surprised we didn't break lower. What we did is we held the the 151.35 was the support I think we wrote down yesterday. Basically, the low came in at 151.30. Guys, that's major support. Now, as long as, and I'll reiterate this, as long as we're below like 152, I think it's a short on rallies. But one thing about the cable is it's been acting really poorly. It's extremely heavy. Okay, the rallies are non-existent. They're just, you know, it's been really tough to play on the long side. Now, I'm not an advocate of being long the cable, but when we're in a deep trend like this, we are susceptible to, um, you know, spikes, short squeezes. Like you can see here, that was a little short squeeze. You can see how we popped our head right above those highs, squeezed, and then reversed. When you're in a really deep downtrend like this, you know, short squeezes are they do happen, and they happen, you know, frequently, and they're at times they tend to be very deceptive. Like, oh my God, that's a trend reversal, but really, all it is a little short squeeze. Anyway, I would be very hesitant to trade the cable on the short side right now. It looks like it will squeeze, but flip side is we have a um, really strong ADP jobs report. We're going to slip right through that support, and if we break through this 151.30, it's going to be a hell of a breakdown. Now I put an asterisk there because it is an important number. I think if we break that, because you see this rounded like bottom right here, there's a lot of people that are trying to get long. They're trying to get long through here, and what they're doing is they're putting their stops below here. They're putting their stops down here. So they're trying to get long. So if we do slip through that support, we're going to break, and it's probably going to be a fairly aggressive break. Okay. Let me change the pen. I don't like that light. The goddamn pen is blue. The pen is blue. No, it's not. It's black. The pen is black. Did you hear that Jim Carrey's girlfriend, she was 28. Now he's 50 something. He's like 55 or something like that. And his girlfriend was 28. She passed away yesterday. She committed suicide. I read that on somewhere yesterday, like on my phone or something. That's Liar Liar, the movie. The pen is blue. For those of you that have never seen that movie, it's a very funny movie. One of the funniest movies, I think. Her fall says Jim Carrey is one of the most underrated actors. I think so too. Have you ever seen him play like a serious role? He's actually really. I think he's a great actor. Funny. I think people just got sick of him. Sick of his comedy. But anyway, okay, where can we rally to? So this is a tough one because you wonder how far we can squeeze, which you know we could probably squeeze right back up to this. See, we've almost already done it this morning. All this resistance through here. This is all going to be a tough area. Um, Congestion, a lot of congestion through here. Everywhere through here is going to be a lot of congestion. But uh, I'll give it up to 152.50. I mean, it's possible we can make it all the way up there. I'm just going to write down 152.50, but any failure up there, I'd be an advocate of selling. We are still in a range environment. Let's go to the Swissy. God, I got to move quickly. I'm sorry, guys. I just realized I'm really just farting around here. All right, so here's the Swissy. 97 has been holding a support. We're, that you can see 97 here really held as support. I think we had written down support yesterday as 98, 96.85, I think is what we had written down. Yes, that spike low, 50% retracement, that's holding. That's going to continue to be support here. Resistance that we're going to have to deal with on the way back up could be right through here. So any move back up to 97, roughly 97.50, because that'd be right through here. So 97.50, 96.85. Swiss 96. This is my only dollar long right now, just so you all know. 97.50 is resistance, and I am holding the dollar Swiss long, and and everybody that's normal listener knows because I am looking for an eventual big breakout to the upside. Dollar yen. Remember we removed this yesterday, okay? But you know what? The thing about the dollar yen that you have to realize here is that, first of all, there's a lot of people that are shorting the dollar yen. They're playing yen to the long side. Okay. We're getting a lot of false breaks too. Like this was a false break to the upside, less to a false break to the downside, which means that we're probably more of in a range than anything. So the range is from, and like I said yesterday, you don't want to play the short side of this while you're so close to the bottom end of these ranges. 121, 119.50, and it's a range, so please leave it alone. Unless you're going to play the extreme ends of the ranges right when you're in the middle, it doesn't make any sense to be trading, because you can just flip a coin. You're better off just flipping a coin or going to Vegas and saying black or red, because right now you're smack dab in the middle of this range. You got a 50% chance that it's going this way and a 50% chance it's going that way. And when I trade, 50% chances trading. You're not going to make a living doing that. So, try again. All right. Yes, Jay, that was it. Eternal Sunshine. One of his serious ones was awesome. That was a great, great movie. My wife and I both loved that movie. That was from like about 10 years ago, maybe. Eternal Sunshine of the something Bliss, wasn't it? And Thomas says the Truman Show. Yeah, that was really good. That was a great one too. Truman Show, really good. Um, yeah. All right. Anyway, dollar yen. Sorry. See, I'll go the other direction. Can't go the other direction. Dollar Canadian. Here it is. Here's the dollar Canadian. So everybody should know this. Major resistance at 134.70. Any move up to 134.70, you have to be very careful being on the long side. That's just, I'll put double asterisk up there. We are still in a very bullish trend. Don't think that anything's changed. We're in a bullish trend. You're now probing major resistance here. Okay, this is support, and it should maintain and still stay support. But I'm going to give you the buts. We break through this, we're going to start to see a pullback. Let me get rid of that. We break through this, we're going to start seeing a pullback here. That comes in at 133.75. Remember, we have Canadian GDP, not only ADP non-farm, Canadian GDP. I did buy the Canadian Swiss yesterday on accident. I can thank Daryl for doing that. I totally didn't know that I could do it. So I bought a really small position of the Canadian Swiss yesterday, and I'm up 44 pips. I didn't know I could trade it. And I'm like, not with MB Trading. They must have just recently allowed trading in it. And I went to buy it just to test it, and I got long. All right, so here's the New Zealand dollar. All right, everybody. Kiwi. Now, this downtrend line is being broken right now. Everybody should know this, that major resistance is at 64 cents. If we take out this resistance, we're going to start to see a squeeze in the Kiwi. Okay? If we can't, we're going to get another failed breakout attempt on the daily chart. We're going to head right back down to 63 cents. Okay, right back down to here. So I'm going to write down 63, 64 cents. Nothing's changed from yesterday. But the problem is we are threatening to go from a bearish trend to a neutral trend. Okay, we're threatening to go from a bearish trend, which we are currently in, to a neutral trend. So, you know, this is a very, very important day for the Kiwi dollar. Let's go over to the Aussie. Aussie dollars, we are already in a neutral trend, but you can see support once again is holding down here. And now resistance, which we wrote down yesterday, look, hey, it's working. That's 70.40, 69.40. And if we break that, we're going right back in 69.40. If we break this 70.40, then then the next place we're going to have is a 38% retracement. Remember, if we bust this, we're probably heading right back up towards here. We even had a weaker Australian data last night, and housing starts? No, building permits? Building permits, I think it was. 70.65. And we are in a range. Okay, when I come back, I'm going to go get some more coffee. When I come back, we're going to do the dollar index, probably do the peso. Norwegian krona might be worth looking at before ADP. So don't go anywhere. I'll see you back here in just a few minutes. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, let's go over to the dollar index really quick. Okay, so just to get a, I have to kind of reload this. It's been a while. All right, so here's the dollar. Here's your daily. Whoops, that's Australian stock market. Excuse me. Let's go to the dollar index here. All right, here we go. All right, so here's the dollar index. Pretty tight ranges. You know, not a whole lot happening, but I'm going to give you the buts. Okay. You see this? 96.24, 95.80. We're about ready to break out. Probably happen today. 95.80, 96 point, what it was it? 96 point what? 20, 25, 96.25, 96.25. And we are in a range, but man, we might break out today. You know, we really might here on the dollar index. Okay, let's go over to the peso. Let's see if the peso is setting up anything. You see, you know, the emerging market currencies are all rallying back today because risk is improved. So do you see the peso? See how the peso rallied back? Oh, look here. What else is rallied back? Oh, let's take a look. U.S. dollar, South African rand. Look at that. Look at the rand. Look at it rally back. Here, let's go to the 4-hour. Okay. Actually, we'll stick with the daily so you guys can see it. There's a South African rand, false breakout to the upside. Here's the Turkish lira. Same thing, failed breakout above the highs. USD, BRL. You know, yesterday I asked how many of you guys can trade the Brazilian real. I'm like, if you can, you probably want to be a buyer of the Brazilian real yesterday. You know, these emerging market currencies are bouncing back a little bit. So then you go to the euro peso. This is a good barometer of risk appetite. As this goes down, stocks go up, vice versa. Okay, stocks go down, euro peso will go up. Okay, it's a good barometer of risk. Okay, peso, as far as what to do with it trading wise, I don't know here. I don't. We're in a very bullish trend, meaning very bearish Mexican peso trend. You can see it right here, obviously, but I don't know if there's anything to do with it right now. I don't know if you really, like, personally, if I was gonna, and I can't trade the peso, but if I was gonna trade it, what I would do is I'd wait for it to get back down here, wait for this trend line to intersect, then get long down here. That's how, personally, that's how I would trade it. It doesn't look like there's much to do with it right now. Norwegian krona. Oh, look at this. So we had a bullish breakout. We're up here. We're at the 127%, I'm sorry, at the 161% extension, near the 161% extension. I said, hey, wait for a sell-off and get long down here at 842. Bam, we did it. For those of you guys that trade the Norwegian krona, worked out perfectly. Great. Support is at 842. Resistance at 862. Okay. So it's still bullish. US dollar, Norwegian krona, and as long as it's above 8.42, it is bullish up to 8.62. Bullish. Swedish krona, I think, is pretty messy at the moment. Yeah, it is. I mean, it's just very, very choppy in a very bullish trend. Okay, we got 10 minutes before we have a we are 10 minutes away from ADP, so let me see if I can take some questions. Okay, let's go take a look at the. So futures have come off their highs a little bit. They're up about 200 when I stepped in this morning. So just a little profit taking. It tends you guys know this happens during this time of the day. Europe is going on lunch. They know that North American traders are coming into town, sitting in front of their desk. Tend to take profits off the table. Get ready for the North American session. You know, Abraham asked, "Good morning, Mr. B. Are you still in the Euro Canadian short?" No, I closed it from yesterday's lunch money webinar for 125 pips this morning. So already out, buddy. Abraham, hope all's well in Egypt. I was just telling somebody the other day that how much I'd really, really would like to visit Egypt. That's one of those places that it's like on my bucket list of places to go, you know. Witt said gold is getting smoked. That was earlier, but gold has created a nice little hourly. I know Witt probably wasn't happy that I posted that chart since he probably on the short side of gold, but yeah, we had a little hammer. But that's going to have more to do with, you know what I would watch here with gold if I was trading it, which I don't trade gold, but I watch it carefully. If gold breaks above 1120, let's just call it 1125, that would be bullish. Kevin says, excellent commentary, Blake, on the cross rates. Thank you, Kevin. Chaz says, I'll attend a cross rate analysis webinar. Yeah, you know, it's one of those I've been asked to do it as you know a paid webinar. If I did it, it'll probably be like, you know, $40 or something, because it'd be a couple hours and talking about different cross rates and how they affect the markets, and you know which ones affect more so than others. But I think it's a very useful webinar for those of you that don't understand the concepts of it, of cross rates and how they really affect the market. So maybe I'll do it for year end. Patrick says, good morning, Blake. Happy hump day. Thank you, Patrick. Happy hump day to you. Carrie says, I have that same issue with my girlfriend. She calls it lack of communication or something like that. You know what? That's your girlfriend. Wait till you get married. Really, really, I mean, talk about lack of communication. I fortunately, you know, I'm really happy that we have this shared calendar on our all of our Apple devices, because if we didn't have that, nothing would ever, we'd be crossing paths all the time. Dimitri says, hey Blake, I was expecting a better reaction from the dollar Swiss following the equities market bounce. A bit surprised it did not manage to break 97.50. Your thoughts, please. Thanks. You know, it might be a little bit of hesitation ahead of the ADP non-farm. It might also have to do with something more important, Dimitri, knowing that we are, you know, we're really less than 100 pips from having a major breakout in the dollar Swiss, and I think as you approach that level, you know, people start to get a little nervous. You know, you're going to need a catalyst to really break us out above there, Dimitri, to break above the, and for those people that don't know that what I'm looking at, and you missed the blog um, on pipzar.com over the weekend, this trend line right here, this is major, and I'm looking for a break above parity eventually with the dollar Swiss. But as we're approaching that trend line, you know, people get a little nervous. I mean, you know, it's like, I don't, you know, I'm long the dollar Swiss right now, right at current levels too. I mean, you know, this is where I'm long. But as you get up here and you approach this yellow trend line, you know, people are like, God, you know, why do I want to get long here? Because it's been rejected. Every time, do I really want to step in front of it right now? You know, so it's some hesitation. We're going to need a catalyst like a strong non-farm payroll to really break it higher. Patrick H said, this is the last day of the worst quarter since 2011. Well, if you're only counting quarters since 2011, that means you ain't seen nothing yet, baby. You're so green. So green. Sean says, hey Blake, what do you make of the flag formation on the euro dollar monthly? I make it to point to 80 cents. I think it looks extremely bearish, Sean. Greg says, Blake, I have no idea how you do it. Oh, get up at 2 whatever in the morning? All I know is a month from now cannot happen soon enough. When we have that time change and I can get up at I can get up like at 3:45 every day. I'm so excited. It's like whew. George says you need to move to a better time zone. The whole reason why I moved here is to be here with my family, so my kids can be around their grandparents, aunts, uncles, nephews. It's the whole reason why I moved back to Phoenix. I would never have moved back to Phoenix if it wasn't for family. But if you haven't figured this out yet in life, at least for most people, and it is for me, family is most important. It is to me. I want to make sure that my kids appreciate their family. So that's why I had to move back here and get up at 2:30 in the morning. Charlene asked, what time is Yellen speaking? I think she's speaking at 3 o'clock. Let me double check that. 3 o'clock Eastern. She's speaking in St. Louis at a community banking conference. I don't know if she's going to talk about monetary policy today, but she's capable of throwing some zingers out there. So it'll be an hour before the market closes, Charlene. Equity markets close. FP says, yeah, naked time. That's right, FP. We're going to naked, trade naked. Kevin says, everyone has their own trading fingerprint, and you should, and that's you should have yours. What's most comfortable for you? Correct. I always tell people, you know, how I do things is not the right way necessarily. It's right for me, but it's not necessarily it's right for you. When you trade, you find a strategy that's most comfortable to how you trade the markets. And if there's bits and pieces that you can take from what I do and you can incorporate it into your trading strategy, your trading style, and it makes sense and it helps you become more profitable, fantastic. One thing that I can guarantee you is when you listen here on the Morning Edge every day, you're going to get the same analysis of the same currency pairs and the same. And I do that because you don't need to complicate things. You can keep it simple. Hey, Paul, so we're about a minute away, right?
Actually, about 40 seconds away.
Okay. Thanks
Oh,
for
by the way, that movie was Eternal Sunshine of the Spotless Mind. I don't care much for Jim Carrey, but he did an excellent role in that. Another thing is, I didn't know he wasn't with Jenny McCarthy, which he needs his head examined because Jenny McCarthy, I don't know what American guy didn't want to be with Jenny McCarthy or Carmen Electra, but Jenny McCarthy, I cannot believe he is no longer with
I know, me too. Okay, what do we got?
Here we go.
A lot of volatility ahead of this. Chop, chop,
Yeah.
chop.
They're looking for 194. That's a Reuters poll. 200, 200.
Good number. Very good.
Yep.
Good number. Dollars firming on that number. You can see the dollar yens. Now remember, this is it's in line with expectations, maybe a little stronger than expectations, and the dollar is firm. You got the euro that's actually pushing below 112. Equity markets aren't doing a whole lot as a response. Dollar Swiss is firm. It's near its highs of the day. Dollar Canadian doing pretty well. But no real follow through. I don't. It's pretty much in line. Remember, it's like Paul. You heard me say it a little earlier. Broad brushstrokes, right?
Yeah, and also there's it's supposed to be a big strike at 112, so that's probably holding the euro here. I'm still looking for a move to 1180, but that might keep it at bay from breaking too hard. But that strike would expire then at 10 a.m. Eastern time, and that might allow us to eventually break lower. I think we can see a move to 1175, but 1180 is going to be a level on the 30-minute. 1179 is a 61% of the recent swing low of 1116 to recent swing high of 1281, in case anyone's interested. But that's where I'm going to be covering the last of that 1/8 short. I haven't done anything with the euro today, but I've kept that 1/8 short, and I'll be looking to go and cover down there. There is on a scalp position. There is some support here if anybody's trying to scalp it at 1193 on a 5-minute chart. And that's all I got.
Okay. All right. Thanks, Paul.
Okay.
I just read a funny comment from Mirko. Mirko said, "If the Fed raises rates, I will poop in my hands and clap." That's gross. It's funny though. See, this is how much people don't believe the Fed's going to raise rates. Isn't that funny, Paul? All right. Okay. Anyway, Eric says, "Is that a flag pad? Is that flag getting close to long versus too long versus the pole on the euro dollar?" Eric is asking. Not yet. Not even close. On a weekly or monthly basis, no. And what he's asking is and just so you guys know this, whenever a flag, the flag itself right here, okay, whenever that exceeds more than uh, greater than 50% of the distance of the pole, then you got a problem. Okay, so this right now is about, I don't know, maybe about 40, maybe 35 or 40, close to 40%. Once it gets greater than 50% of the pole, the distance of the pole, then it nullifies. It nullifies the pattern. So, for example, if we sat in this flag pattern until December, then it would be pretty damn close to nullifying itself. Hopefully that made sense. Patrick says, "Such a great explanation in your view on the euro with fundamentals and long-term flag. Hardest part for me remains trading shorter view, but keeping longer view fundamental factors." You know, I thanks, Patrick G. And you know, as far as I think you should always keep the longer term view in the back of your mind. Okay, you should always keep that longer term view in the back of mind. By the way, the pound's 30 pips from its 25 pips from its lows. The euro's getting weak, coming down towards that support. We're at 1090 right now, or I'm sorry, 11. Sorry, we're not even close. 1175 is the support we wrote down yesterday. We're getting near there. Um, that I always try to keep the longer term viewpoint in the back of my mind. That's why it's important to do this analysis every day, Patrick and everybody. It's because we can talk about the, like, what is the bigger overarching theme of the market, and how does that factor into our short term analysis. Like, as much as I go Swissy, go new highs, as much as I because I'm long the Swissy and I'm happy that it's hitting new highs. As much as I like to trade in the direction of a longer term theme or thesis of the market, what I feel is the overarching theme of the market, I still can trade counter trend. I just don't like doing it. And as long as I, recognize, oh, this is, you know, it's against my longer term backdrop of the market. If I trade the euro, you'll notice if I trade it like to the long side, I'm only long intraday. I won't stick around, because I'm always keeping in my mind, the euro looks like it's actually going to 80 cents over time. So if I'm going to trade the euro long, which I'm not doing today, obviously, but if I was doing that, I'm only going to do it from an intraday on an intraday basis. So